What's up, guys? Thanks for watching the podcast. I truly appreciate it. I would really appreciate a like and a subscribe from you. That helps the YouTube channel grow. And I wanted to drop in and remind you one more thing. If you have any friends, family, or anyone you know looking to buy, sell, or invest in real estate, please have them call me. Get in touch with me via email at blake@blakebaker.net or on Instagram at blakebakerrealestate. Enjoy the episode. Welcome to the Under Contract podcast. All right, man, we are rolling. Ladies and gentlemen, welcome to the Under Contract podcast. This is episode number 17 already. I can't believe it. Time's flying. Before you know it, we'll be at 20. And so anyway, got my friend here, Mr. Lucas Wright. Let's give him a round of applause.
That's so good.
What's up, brother? How are you?
It is going. It is a beautiful day today. The sun is out. I'm at this incredible podcast. What an interesting setup you have here. Well done, my friend. This is incredible.
Thank you. It's not quite where I want it to be yet. I would like to get a neon sign soon. But
gotta have the neon.
The Banksy's going to do it for now.
Oh, okay.
So why don't you kind of just introduce yourself and what you do and who you're with and everything.
Okay. My name is Lucas Wright. I'm a loan officer. Been a loan officer for about a decade now. I'm with the Caballero team, which is the corporate office of AMCAP. So, and then I also live in Friendswood, so I'm able to go in and out of the Friendswood office as well. So I'm very fortunate to be able to kind of be a hybrid satellite guy of the corporate office and the Friendswood office. And yeah, I'm very fortunate to be with this company. I've been really enjoying the process that they have there, the systems. And more importantly, the people. I really enjoy the people. So.
Yep. So have you been with AMCAP the whole time, or have you?
I have not been with AMCAP the entire time. I've been with AMCAP now for about, I'd say, a little over a year.
Okay. What led you to kind of get away from your other I guess you call it a brokerage?
Brokerage company.
Yeah.
There was nothing personal with my prior mentor. His name was Ashley Manmeter. Shout out Ashley. Excellent guy. We were just on polar opposite sides of town. He was on the north side. I was on the south side. And then my wife actually works at Kruger Real Estate. Shout out to my wife. Beautiful wife.
What's her name?
Jordan Wright of Kruger Real Estate. Shout out. And
I think I knew that. I think you knew that.
Yeah. And she is with Kruger Real Estate. And I'd been going to their networking events back and forth. And I had met Jeff and a lot of the team at those networking events. And they were just really cool people, and we vibed, and I really enjoyed their, approach to mortgage and how they really are a customer service centric, business. And I wanted to be a part of that, and it just clicked, and it was able to really work well because I live in Friendswood. There's a Friendswood office there, and then also the corporate office. So I just have this ability to go back and forth and have all the support I need, and I feel very fortunate to be a part of that team. So
awesome. I feel the same way about my office, man. It's, even though we're all kind of technically working for ourselves, the camaraderie at the office and like the family vibe, if you have, like, I feel like my office is kind of like a family. So I can't imagine just being in an office where you don't know anyone and like because I talk to agents all the time that, I've never met my broker. I'm like, what?
Wow. Yeah.
What do you mean? Like, what if you need something? Like, what if you have we have situations arise where I'm like, okay, I think I know what to do here, but let me call my broker and just double check with her to make sure this is the right thing to do. And it'd be scary not to have that, man, because you could really get in trouble.
Absolutely. What's that old saying? Buyers are liars.
Buyers are liars and sellers are full of shit.
There you go. I say I haven't heard that part, but I can imagine definitely on y'all side, especially. For me, it's not that the distance was a problem because, for example, we'd meet on Zoom every morning at 9 a.m. and it was religious. 9 a.m. They'd be on the Zoom meeting. We'd go over everything on the file, so from start to finish, and it was organized. But you and I both know a digital relationship's not as authentic as being able to sit down with somebody such as a podcast, right? And have a discussion and, really hash things out. And I just feel fortunate to now have that in my life. It's not that was something that was like drastically missing or, it just sincere human connection. If I learned anything from COVID, we got to have connections.
Yeah. Yeah, absolutely. You don't need money, you need people.
Absolutely.
I heard a billionaire say that on YouTube. I don't like know the guy or anything, but it's just interesting to hear someone that's been that successful say that. And like, he's like, I don't even care about money. It's about the people, and the money comes. So, but man, I'm going to ask you a couple questions that I get before we dive into all your stats and your outline that you brought. So this is one I run into as an agent fairly often when you have someone hit you up saying they're ready to buy, and hey Blake, ready to start looking for a house. I'm pre-approved with Rocket Mortgage.
Yikes!
So I can shoot my letter over, and I usually will try to kind of tell them like, look, I'm not saying that every experience with like a Rocket Mortgage or a Wells Fargo is going to be a negative experience, because I have done them before where it was tolerable. But what is the advantage of having like a local guy like yourself, where if I refer you a buyer who's, if they say, hey, Blake, do you know a lender? Yeah, I know my friend Lucas here. He does business in this area. He's from Friendswood. He's a local guy. What are the advantages that they will get with you rather than a 800 number, press 1 for English?
Well, I can't speak on behalf of all local lenders because, and this is not like a shameless plug, it's just something I really take pride in, is being available and answering my phone. I don't always have the answer, but I know I'm going to answer my phone.
Yep.
And there's a reputation that comes with that. And, being a local individual, I'm in my community, and I have a reputation to uphold, and, an integrity to tie to my name. And it's just important to be available. And I can't speak on behalf of these online lenders because most of the time they're not accessible. I mean, I can speak on behalf of my wife, who, she's a realtor, and she can tell you firsthand there's critical moments where you need to get in contact with somebody.
Yep.
And you cannot get a hold of them. On
a Friday afternoon, like before the title company and everybody's about to be closed for the weekend, you're trying to squeeze this thing in.
There's a buzzer.
And they clocked out of the office at 5 and see you Monday.
Yep.
I've ran into that a couple times.
And it's just it's important to have someone that sincerely cares. And once again, it's not necessarily an ego thing, but I care to show in my business that I'm working with an individual, with a family, and it show in my work that I really care to help a family out. And at the end of the day, I get compensated for it. It's a beautiful thing what we can do in our industry, which is help people and somehow be able to make a pretty decent living taking care of our families. Mm-hmm. And I find that to be something immensely valuable.
Dude, it's actually insane when you think about it, because before really our generation, I guess you would say, we have so much access with the internet now that, used to where you had to go grind at an office 8-10 hours a day. Like that's what it was. And I was kind of, I was born in 89. So coming up in the 90s, it was still somewhat that way. And in my head, like a full day's work is like going out, getting it all day, every day. But we are so tied into everything with these phones now, where you could literally be doing whatever and working and being just as productive.
Right.
But for me, I'm like, I feel like I'm not, but I am. It's hard to explain.
It's an interesting concept because, like, for example, I don't mean, obviously I wasn't there. I was born in 92, but in the 80s, we're still tied to your landline. Right?
Yes.
Like, so people had desk time, or whatever, right? They'd go sit and hope somebody calls the office. Mm-hmm. It's just, and essentially that's just dead time. You're literally looking at a landline, praying that someone calls and hope that business comes in. And in some ways, we're kind of in the same boat, right? We're praying that someone calls us, because at the end of the day, if your phone's not ringing, there's no way for your business to be, truly flourishing, because at the end of the day, if we're not making appointments, not making face-to-face deals, we're certainly not closing.
Yeah. Yeah. If my phone ever goes silent, that's when I start making calls.
Absolutely.
Hey, what's going on? How can I help you?
The old Rolodex right now is getting pretty warm.
Yeah.
Yeah.
Dude, I'm having people hit me up pretty early in the year compared to normal.
Yes. I have a lot of people actually giving me a phone call now, and they're doing it kind of by the book, which is they're actually getting their credit in order, and they're trying to speak with me, essentially, me first before calling a real estate agent, which, don't get me wrong, you can call me anytime. It's just ideally, you don't want to be calling me when you're already in the house trying to make an offer and you don't have that letter.
Yeah. Yeah. So you will hear realtors all over TikTok and Instagram make memes out of it. They freaking wear this statement out, but get pre-approved before you start looking for a house. And the reason you want to do that is because say you go look at this house, you fall in love with it. The kids love it. Daddy, this is going to be my room. You know, the whole family's on board.
The forever home.
The forever home. You find it. You're in love. The wife loves it. Everyone's happy, right? Okay, well, let's go get pre-approved now. Dude, and then somebody who's already pre-approved swipes it.
Too late.
Avoid the heartbreak.
You snooze, you lose. There's literally a saying for that.
Mm-hmm.
And, you know, you wouldn't necessarily go to a car lot and just walk around and, you know, say I want to buy a car and not having any money.
Yeah.
It's kind of a silly example, but I mean, if you don't know for sure, why would you be there?
Mm-hmm.
So it's definitely something I'd recommend that you do is, you know, get yourself some certainty beforehand. Know that you're going to be able to qualify. Know that your offer is going to be a winning offer, and stop losing time.
Yeah. And, you know, I tell people this, you know, put yourself in the seller's shoes. If you're selling your house, do you want people walking in your house, looking at your house that haven't even talked to a lender?
No,
Not
at all.
No, you want qualified buyers that aren't wasting your time, that you know there's a possibility of them liking the house and making an offer. So, yeah, that's what I usually do is I'll get somebody that's not pre-approved and they want to look, and I'll show them a couple just to kind of like, you know, get the relationship going.
Of course.
And so they can kind of get to know my vibe. I can kind of feel them out as well. And then I say, look, before we move forward, you got to get this done.
Of course.
And how fast can you crank out a pre-approval letter?
I mean, if it's a straightforward pre-qualification, I mean, it can be 15 to 20 minutes.
Yeah. So it's not like a long drawn out process. Like you can kind of take them for their word on the upfront stuff. And then once you give them the letter, then they start submitting docs and tax returns and pay stubs and all that stuff, right?
It's just interesting how clients will commit an entire weekend of uncertainty to a real estate agent, but won't give me 30 minutes on the phone or face-to-face for some certainty.
Yeah.
And, I mean, I get it, because at the end of the day, the home is the tangible asset. That's what you're there for, right? I mean, me giving you financing is not me showing up with a briefcase of cash. If it was, that'd be way cooler, and I think we could definitely maybe, you know, implement something like that, like going to a closing table with a big...
Yeah, it's like I'm, as the realtor,
old school style.
I'm kind of the tour guide. Like I'm like taking everybody out and showing them things, but you're like the navigator. Like, okay, we want to, it's like, you know, we want to buy this, we want this house. Okay, well, how are you going to do that? It's like, you're going to sail to Australia, cool, but how are you going to get there? You're just going to get lost. Like you need a roadmap. You're the guy that's going to give them the map and show them, like, because man, they may think they're going to qualify for all this and that, and they may not, or it may be the opposite. They may be underselling themselves, and there's like just so many different factors that go into that. So
my favorite is when I have people that call me that are overly qualified, but they don't necessarily know it. Meaning that they shoot me the application, and they're like, man, I don't know how my credit looks, and I'm not sure about my assets, and I get everything in, and it's just crystal clear, as beautiful as it could be. And I love giving that news. That news is always nice, right? Like, oh man, I wasn't sure if my credit, I thought I was like a 620 or so. Then they get their credit score back, and it's, you know, 750 plus, and that's just excellent news. And of course, there's the flip of that token, which is, Lucas, my credit's 800, and then I pull the report, and, you know, they're not aware of something bad happening, a repossession, or, you know, you signed the credit card off for your kid and your kid missed a bunch of payments, or anyways, that's never the fun news, but it's nice.
I've definitely found when people try to like hype themselves up front with me,
of course,
that's a red flag.
Yeah. When they're very braggadocious of what they have up front, like, you know, confidence is somewhat quiet, right? Especially when it comes to finances, it seems like you kind of realize, like, the people that are immaculately wealthy, that you just cannot fathom how rich they are, they don't really talk about it. And
they don't want anyone to know.
Exactly. I wouldn't want people to know.
So, yeah. But I guess let's get into interest rates, because, you know, with my content I've been making lately, I kind of usually fall into a real estate conversation everywhere I go if I see someone that I know.
Of course.
And the number one thing, man, interest rates just crazy right now, right, dude? I mean, you know, we got 3.25, like I have 3.25 on this house, but
fantastic.
we got a little bit spoiled with all that.
Of course.
And historically, 6 is about normal. So just talk about how it went from 3.5, 3.25, doubled up to 7. Like, what did you kind of see in the market? Because what I kind of saw was an initial shock factor, scared everybody, and the market just kind of literally stopped on a dime. And then once they kind of trickled back down a little bit into the 6s, people just said, you know what? I got to have a place to live.
Of course.
And it picked back up. So what did you kind of see?
It was interesting as I saw people kind of, initially they weren't panicking too much because rates still weren't too bad, right? Going from let's just say 3.5 to 4.5. And then, obviously from 4.5 to 6, it's like that's when the dance started to get kind of sour, right? Nobody at that point wanted to see kind of where this would end up. They didn't want to gamble on their financing anymore. So I guess what I saw was people who were excited become very discouraged quickly and get priced out of the ability to be able to purchase. So, I mean, going from a 3-something to a 6, you're then doubling the interest rate, which drastically cuts down the ability for people to purchase with their debt-to-income ratio.
Whereas they were good for 600,000, now they're good for 400.
Correct, and it's really hard to go from seeing, like you said, that $600,000 house to a $450,000 house, and your expectations drastically go down. I mean, so your monthly payment just went up, and not necessarily the quality of the house, but it's a lesser purchase price.
It's going to be probably a smaller house.
A smaller house. You're going to have less square footage. You might not have that third bedroom you needed, or whatever that came with that. So it just was kind of to the point where people were only really purchasing unless there was a necessity, like a relocation or I don't know, moving school districts in time. I don't know, but it was really quick, and I would say what I saw was like the balloon. Like, probably cut this out. Like the balloon just like, just slowly go away. It just, people were not motivated anymore.
Yeah.
And I can't blame them. Going from a shiny 3 to a 6. And then the other thing is, it was kind of funny, is people kind of took it personally. Like, it stunk for a while because people would call me to qualify, and even with great credit, they would expect a certain rate, and then you'd give them X rate based on where the market was and their credit and everything. And, they kind of were like, what? Like, this is my rate? It's just, once again, I don't dictate the market. I'm just the median of it.
Yeah. I mean, like, you're not trying to get the best deal for them so we can all get a deal done together.
Exactly. If it was up to me, man, I'd give people negative rates and pay them to live in houses. And
see, y'all,
that's not how it works.
Y'all go through some stuff that I don't. Yeah, I go through it to a degree, but like with lenders, one thing that would drive me crazy, which I'm sure it does, is whenever you'd like do a bunch of underwriting for someone, or like they submit everything, and then the last second they're like, hey, this other lender gave me a 0.5 point better rate.
Oh, man.
Can you match it? And then if you can't and you lose it, oh my gosh.
Oh, yeah.
Y'all have it rough on that front.
Whew. Yeah, it can be very disheartening. As they say, there's no loyalty in sales.
That's true.
And, well, it's interesting. It's like, for example, there's been times in my career where I've completely repaired somebody's credit. Let's just say they started out, at a 500 score, and we do everything that we can to mitigate the damage that they put to their report, and we bring it up to a 700. And this is a process of 6 months, and then we become friends, and I learn their kids' names, and we're buddies, and they call me regularly to give me updates, and I call them to get updates, and
you're not getting paid a dime in this whole meanwhile.
No. I'm getting 0 percentile there, and it's costing me a lot of time and effort. And it's unfortunate, is because, like, for example, there was a time where I did do a complete repair for someone from a 500, I think it was like a 700 something plus. It was still an FHA deal, which is still a great deal. So people, when they sometimes feel like they're getting an FHA loan, they're like, they feel like they're being downgraded, like it's a degraded loan. It's not. It's a great product. It's a first-time home buyer program. Not necessarily. It's for anybody. I mean, you could just put 3.5% down. Don't have to be a first-time home buyer program or first-time home buyer. And people just presume it is because of the low down payment and the mortgage insurance.
Mm-hmm.
But these people went from, like I said, 500 to 700 something plus FHA deal. And then, once you pull a credit report later on in the future, sometimes that information is flooded to all these different mortgage companies. And then they get emails, they get calls, they get mail.
That's actually a problem, dude, because
it's a huge problem.
I had a friend who got pre-qualified or pre-approved, and those creditors sell their information, and they got like badgered with calls, dude, like 5-7 calls a day. And they were like, dude, what is going on? And I just said, look, it's not the lender's fault. It's the creditors.
Yep. I have people that I work with ask me, like, what'd you do with my information? I'm like, I didn't do anything with your information. I did what we discussed with your information, which is pull a credit report.
Yeah. I made a video on that, on how to, there's like a website you can go to unsubscribe from all that.
I think it's like optout.com.
Yeah. Yeah. Optoutprescreen, I think, .com or something.
Do it. If you haven't done that, you should absolutely do it. Quit the badgering, the robocalls. I mean, I get people that call me all the time asking me if I'm my dad.
Me too.
Trying to buy his house. My name is Lucas Wright. Look, video camera. This is me.
I got one yesterday.
Yeah. Stop calling me.
For a house that we never owned. I don't think we ever even owned like a house on the street, and somehow our name was tied. My dad's name was tied to it, and my number was on it. So I don't know. I
mean, it's pretty immature of me, but I'm at the point now where I have fun with it. Like I just go with it. So I answer him like, yeah, I'd love to sell you the house. I'd love to give you a great deal on it. And I'm like, there's only one issue, which is there's actually a family of dead raccoons in the air conditioning unit, and the house really stinks. And there's actually a ghost in the basement. We put a basement in the house. We have a shaman coming. He's gonna bless it. It's gonna get it. Just see how long I can keep them going. And they typically hang up, but they still call back. So stop. Leave me alone.
Yeah,
I got nothing for you.
Yeah, that's because I used to cold call, and
I still do.
Tried it for a while, but man, it's rough.
But real quick, going back to that deal, which is we got them from 500 to 700, and then another lender reached out to them, and at the time, pretty much cut their rate to where nobody was making anything. At the end of the day, I do take care of my family this way, and they cut it by 1/8 of a point, which at the time translated, I think it was like $6 or $7
a month on the
monthly payment, something like that. Just something
negligible.
Yeah, I'm not implying that doesn't add up over 30 years, because it does. But for the amount of work and effort that went into, repairing their credit, establishing the relationship, speaking with the listing agents back and forth to help negotiate some credits at the time, it was just like, not that I felt like I deserved it, but I felt like I'd earned it.
Yeah.
Right. And that can sometimes it's not enough.
Yeah.
And it's disheartening.
Yeah. It's funny. You have someone, like for me, it's like somebody hitting me up wanting to do something, or hey, we're looking for a house over here. And then you don't hear from them. You kind of follow up, don't really hear from them. And then you see their house listed with someone else. And it's like,
right.
Dude, that used to drive me up the wall. I would be like, what did I do? I would like go into my own self. Like, what did I do wrong? How did I fail to get this listing? Like, what do I need to change? And I think that's healthy to a point, but also like, dude, you're just going to lose some.
Yeah.
And you might as well just take your little 5 minutes and be pissed off, but then forget about it, because it's not going to serve you to just keep ruminating on that. And it's not like you should go back to him and be like, dude, I thought you were, it's just not a good position to be in.
Right. And what's unfortunate is, it's not that you take it personally. It's because you care. You know what I mean? Mm-hmm. You cared to do a good job.
Yep.
You cared to see that through. You cared to build a true, sincere relationship. And that was something I had a hard time with at the very beginning of my career, which was, I felt like I was giving my true, sincere self to everyone. And the rejection of it was too much. Right?
It's a lot, dude.
It's like, I really cared. I gave you my deepest, truest self to you, and I cared, and it wasn't enough. But then obviously the thicker skin comes in the career, as the years go on. But it's just like, there's times where that inner reflection is useless because there's nothing you could have done. You know what I mean? It was not you. It was just, it's the way of the game.
Yeah. I've definitely, it's funny though how stuff works out, because like the deals I have lost, I'll just kind of keep an eye on, just in case, like say if I lost the list, like I didn't get this listing, right? It was a specific situation. Well, I told him like a price. I was like, I think it's worth this much, but it's your house. I always kind of put it in the seller's lap. Like, here's the information. Here's what I think it's worth based on this information. What do you think? And then, I got a call, like a week later. Hey, we're going with someone else. And I'm like, man, cause we're in kind of commissions are under more scrutiny than they've ever been under on the realtor side. So I don't know what all happened in the back, like with them, but I just kind of kept an eye on the house just in case it came off the market. That way I could follow up and be like, hey, I saw the house didn't sell. If there's anything I can do for you, let me know. Well, it sat and sat and sat and sat. And then they started playing terminate it and put it back on the market to start the fresh days on market a different set of photos. And look, my point being, it was a huge waste of time for that agent that did get the listing because it never sold.
Right.
And dude, open houses, marketing budget. I mean, photos, 2 rounds of photos is probably like $700, $700. So it was a blessing in disguise that I didn't get it, is what I'm saying. So that happens kind of often.
I had a mentor named Yanni. Shout out Yanni, who's now in Spain, retired. I hope you're enjoying yourself.
Dang, lucky.
Yeah, he was actually a loan officer, I think, for 40-something years, for a long time. And he was very wise and very short-tempered, but because his patience was gone. he couldn't do it anymore, So I'm glad you retired. But he told me something that still is very pertinent to me today, which is the best deals are sometimes the ones that you just walk away from.
Mm-hmm.
And I'm not implying that I like to walk away from deals by any means, but sometimes, like you're saying, it's there's a reason for it, or you have a gut feeling, and maybe it's just not meant to be for each other.
Mm-hmm.
Like sometimes really, you get into a relationship at the beginning, it's all hunky dory. Then you kind of figure out after living together and how it works, and this is not how it's supposed to be. So I guess, there's some value sometimes in saying no and knowing when to leave and when to take an L.
Yeah. Yeah. Sometimes you just got to take it, man. I've been really lucky though. I've never really had to like fire a client or anything,
Yeah, I think I've had a couple.
I mean, if you start coming at me like with like personal attacks, like if you're not happy with what's going on, then it's like, okay, you crossed the line. I'm not going to be talked to that way.
Right. So luckily I haven't had any encounters like that. It was more so like I'd already negotiated the best deal possible for this guy that I could. I was already cutting my commission. We'd already negotiated credits with the seller. We as a company and myself had done above and beyond. And then we came where, it came down to, I think, something along the lines of a quarter of a point potential difference in interest rate at the time. I don't necessarily remember everything, but it was just like we gave our best and this is all we can do, man. This is it. And you can either walk away or not, and he just chose to walk away. And I don't remember if we closed or not, but as far as walking away, I didn't really fire him, but it got to the point where it was like, this is it. Like, I don't know what you want me to say. You know what I mean? And, and that upset him. And then I pretty much just said, you have 2 choices. We can close or we cannot. And that was it. So,
yeah. Well, you're not going to be able to rationalize with everybody.
Can't win everything.
So, well, man, you want to get into this outline a little bit?
Absolutely.
Rates and where they are now, the Freddie Mac website and how people can use that.
Yes. So if you go to www.freddiemac.com/PMMS, that's freddiemac.com/PMMS, there's a very valuable timeline that shows interest rates, I think, going back from the 70s to now.
Yeah.
And I think even farther, honestly. But long story short, it has recession periods, and it shows the trends for interest rates from then to now. And you can see at any point in history, essentially, where the index was, what the market was like. And you can see it's a very downward spiral trend. I mean, at no point does it go drastically up. You'll see pretty much the time that we're talking about, which is where it went from 3 to 6 or so. That's pretty much the only real blip of increase on that graph. And you can you can get some perspective here. So, for example, my parents, when they bought their first house, I think it was in the early 80s, they had a 13% interest rate and they were excited because their friends had like a 15%. I think they even told me they threw a party or something like that. Like, we saved some money. It was like 2% on a rate, which does translate to a lot of money. But my point being, if the baseline rate then was 10% plus, that's pretty astronomically high compared to where we are now.
Right. Yeah, the only redeeming thing though for them was houses were so cheap.
To be fair, yeah, they probably got their house for like $30,000. And it was probably 4 stories and they already had a pool. And no, that's not true. But shout out to Sagemont. I don't know if you know where Sagemont's at.
Oh yeah,
yeah, Sagemont. That's where my parents got their wheels. So
yeah, that area floods.
Yeah, I think they got out of there. Thank God.
Yeah,
but yeah, well, I think it was Sage Glen.
All those streets are like Sage something, and then Kirk something.
Yeah, Sage Meadow, I think.
So, but basically, this can give people some historical perspective, and you know, you were saying that about the really the only blip being this last little recent uptick in interest rates, but the only reason that was kind of even an upward blip was because of how low rates got, which was correct. That was a historic anomaly.
Absolutely, and yeah, it's. Everyone compares and contrasts to the golden egg, you know, that was the 3% rate. You know, everybody wanted the 3% rate. That was the question I had for like a year. Even post 3% rates was, how do I get to a 3? And don't get me wrong, 3 is a great number, but you know, you could also have gotten a 2.75. Mm-hmm. You can get a 15-year, you know, you could anyway. But I mean, take the time to look at that website and you'll see we're not in a horrible time to purchase. It's obviously not the most ideal. It's just when you compare to 3 to 6, that's a 50% increase. Mm-hmm. Of course, that's a lot.
Dude, it's like, this is probably going to catch some people off guard, but it's like steroids in baseball. Okay, so hear me out. Once you see Barry Bonds jacked out of his mind, hitting 500-foot shots.
Exactly.
You don't want to see like a natural, like lanky guy get a base hit. Our baseball players now are phenomenal. They are.
Correct.
But once you've seen like I said, Barry Bonds, you know, just I saw him hit the scoreboard one time in Minute Maid in batting practice. I mean,
wow.
You're not going to see that anymore. I mean, it's just, but you know, like my point being, once these people saw a 3% rate, it's like, even though 5.5, 6 is still historically fine, it's like they don't want to hear it.
Yeah, I mean, imagine going to a bodybuilding competition and, you know, your Mr. Olympia's, you know, your 3% rate, and then your 6 is, you know, Johnny Tsunami, who's the natural guy. It just shows, yeah, you're not going to feel very confident about what you have. And don't get me wrong, you know, that good for Johnny because he's trying and the rate's not that bad.
Yeah,
like, you know, so,
he's got an all right body.
Yeah, he's hanging in there, you know. But it's just funny, man. It's just like a 6 is it's not bad. I mean, to give you some perspective, me and my wife bought our first investment house, I think 3-something years ago. Me being a loan officer, I'm incentivized through my company at the time. We got a 4. You know, it's not bad. We have good credit. We take care of our stuff. Luckily, I was, you know, indoctrinated into credit pretty early because of what I do. And even then, you know, we have a 4. You know, we didn't cry about it because it's not a 3.
Yeah.
You know, we just know that eventually, hopefully, rates go back down even further and we can refinance.
Yeah.
And now we have the house that we want, and we got it for an outstanding value. I think we got it for $197. We could easily sell it for like $260 right now. Mm-hmm. Yeah. And the idea is to just multiply that, use that income to the next property, and then you know, continue to make investments. So, a lot of people hear the word refi, and I don't know if everybody actually kind of knows what that is. Can you kind of just explain, like, say if I'm in this house here, and this is not the case, but say I got a 6% rate, and rates did drop to 3, and I say, hey, I want to refi. Like, what all does that entail? Like, what do you need from them to refi? It's pretty much just like doing a normal transaction, right? It's basically like you're repurchasing the house from yourself. Yeah. But obviously with a new investor, and you're just documenting exactly why you should be repurchasing your house at a better rate, which is not really too hard to explain, right?
Yeah.
Because when there's a refinance, you have to have a basis and a reason for it. You can't necessarily just refinance unless there's a benefit, right?
Yeah, well, if it doesn't make financial sense, then what are you doing?
Of course.
You know, because you're going to have your set of closing costs like normal, right? Of
course.
So it's like, you know, let's spend this 10 to 12,000 in closing costs to save us 70,000 over the life of this loan or more.
Absolutely.
That's the point.
So if you have like you said, a 6% rate and you're making a monthly payment that's $1,500, and for easy math, you refinance to a 3. So now you go from a 6 to a 3. Let's just presume now your monthly payment's $1,000. Now you're saving $500 a month, and you're making a lot more in equity each month.
Yeah.
Because you're now paying yourself to own this. You were already paying this money to own this house. Now you are paying far less to own the same house.
Yeah. And if you're going to stay somewhere for a while, refi is something to look at. But I did have a friend who he refied when rates, he bought it in like 2018. I think he got like a 5. I think they were like 5.25 then, something like that, 2018, 19. Then he refied whenever they got super, you know, into the 2s, low 3s. And then he decided to sell. And he was like, damn it, I wish I wouldn't have refinanced. Yeah. So if you're going to stay there, refinance. But if you're planning on leaving soon, it may not come out in the wash. Like, it may not really be worth it.
Absolutely. There's people that don't sell their homes because of the rate that they have on the house.
It's kind of me right now.
Yeah. I mean,
kind of looked around. It makes
total sense.
Yeah. It's like, yeah, the payment on this house compared to what it would be now at these rates is, I feel lucky.
And the fact of the matter is you're never going to lose money, especially in this house. You know what I mean?
Yeah. And it's funny, you know, I asked my financial advisor, I was like, should I work on paying this house off early? And, you know, most people would be like, yeah, having a paid off house is great. He was like, no, why would you do that?
Correct.
And I was like, I don't know, you tell me. And he was like, well, okay, think about this. You have a 3.25% interest rate. Why would you sink a bunch of cash into an asset where instead of sinking all the cash into it, you could put it on the market and make 4 to 5%? Additionally, inflation was at like 8 or 9% when we had this conversation. It was when inflation was just, it's kind of leveled off now from what I hear, but it was on the uptick big time. And he's like, look, you effectively have a negative interest rate because inflation's at 8 or 9, your rate's 3.25. So you're paying them back with inflated money. I was like, dang, that's freaking chess, not checkers.
Huge.
Yeah. So, yeah, I mean, it's just kind of counterintuitive. Once you learn how to play, when you learn how interest rates dictate pricing on not just homes, everything. And then it's like now all I can think of is if I have debt and I'm like, okay, what's my rate and what could I get on the market if I put it in stocks or invest it? Then you got to play that game, you know.
Debt is not necessarily a bad thing.
No, as he was, you know, he told me whenever rates were really cheap, he was like, I'm trying to get as much cheap debt as I possibly can right now. And dude, it's like the total opposite of what I was growing up being taught.
Oh yeah.
Like my dad's like a, you know, no debt, pay cash for everything if you can type thing.
Absolutely.
And you know, I was thinking about it and I'm like, okay, well, even if I do pay this house off, like my payment on this house is about $2,400 a month. Say I pay it off, it's still going to cost me $1,100-$1,200 a month to live here with taxes and insurance.
And insurance, yep.
So it's not like I'm like getting rid of a whole $2,400 payment. It's going to get rid of about $1,200 of it or $1,400 of it, and it's still going to cost me. You never really own the house. I mean, as long as the taxing jurisdictions are there, you got to pay them. And yeah, so that's where I arrived at. I'm like, okay, I don't need to be throwing like a bunch of extra money into this house. I can, you know, put it into my business or whatever else I want. Like, it's not really necessary.
I mean, better yet, I mean, it's almost like why pay it off when you can also make one additional payment each year and cut your term almost in half.
Mm-hmm.
Why spend all the hard-working money that you've spent so much time to accumulate and just throw it away for something that is, like you said, it's borderline free money. I mean, 3.25 is nothing.
Yeah.
Why? I don't know. Why anybody do that?
Yeah. It's like, I think it was actually like the lowest interest rate average in the history of the world. Like during that time.
The lowest that I've ever given was 2.5.
On a loan? That's great.
Ever.
Did you ever hear of anything in the ones? Like with buy downs and stuff?
I mean,
I heard rumors, but I don't know if I buy it or not.
I never did. And the only reason being is because also, I mean, it's still like free money. It's like going from a 2 to a 1. You know, it's not.
What's the difference?
Right. It's not insignificant, but it's probably minuscule compared to what the benefit should be. You know.
Yeah. So moving along on this little outline here, the pros in this market. So I agree with these points that you have right here. That the first one is less competition. So I've probably freaking driven this home in this podcast a million times. Like if I've said this before and you've heard it, I'm sorry, but
sorry.
The 21-22 market. I mean, obviously, me and you. I think that was around the time we like first kind of started talking, and we were kind of experiencing the same thing. Just like a motor trying to run on no gasoline is pretty much how the market was.
It was exciting.
Oh, it was exciting. It was. You never knew what was going to happen day to day. So.
Never knew. That was the first time where, you know, I had to kind of like subdivide my day in terms of like working in the morning time. Like I need to take a lunch break and then working in the evening because it was that busy and it was awesome. It was a unique experience. And, you know, I hope to have many more booms like that in our career. And, you know, I am positive to believe that there's one in the near future.
Yeah. That's how I felt last year. It just got, it was
squirrely
because I didn't really know what to expect after 2021 because 2020 I had like a breakout year, and then 2021 was the first year where I had made less money than the year I made before, and I was pissed. And then 22 it like rebounded and I did even better than ever. So I don't know, but
it was the fuel you needed, you know?
Yeah. Oh yeah. Yeah. So the less competition thing is huge because, man, my freaking typing fingers got worn out writing contracts that didn't get accepted. And I was sitting there watching it go on. I'm like, dude, this cannot continue. Like overpaying $50,000, $60,000, $70,000 on these houses. And the problem there is if one sells and they waive their appraisal and it sells for $70,000 over, that drives prices up in the neighborhood.
Oh yeah.
So it's like a compound effect because that's now a comp. Like it's a legit comp. It is. It's sold for that. Like so Facts. That's what the market is. So that's why prices jumped up so quickly, and it was just crazy how fast those interest rates flipped the market on its head, though.
Oh yeah.
Because it was like 1 month, I feel like it was still kind of like the multiple offers type deal, and then I got a listing. It's actually one street over here, but it was just like put it on the market. I'm kind of expecting, traction like always. Since 2017, I've been in the business. It's been quick. Crickets, bro. Had to have an open house.
Yes.
Yeah.
That's when things are real.
Yep. And then we ended up selling it for the asking price, but the buyers got, I think, $11,000 in closing costs, and we had no other real we didn't really have leverage, and I had to kind of explain to the seller look, we have no other offers. This is what the offers are.
Right.
And she was moving into a new construction that she needed to kind of get her house under contract so she could close on her new one. So that's what it ended up selling for. I'm pretty sure those buyers walked in to that house getting paid rather than bringing a check to closing. They probably got a check at closing.
It's totally possible. I've seen it happen, especially with down payment assistance loans. But I would say, I can tell you firsthand. So when my wife and I bought our first investment house, she has access to HAR and MLS and all the nice apps that I don't have, right?
Right.
We were watching a movie. I remember the specific movie. It was that movie with Matthew McConaughey where he's like a beach bum or something like that. And it sucked. And we were both just not enjoying it. And we were at the time looking to buy an investment house, and we were flipping through, and she's like, "Oh, this house just came up on the market. I think this is the one, and let's go take a look at it." And luckily she has the app and everything. So we booked to view it at I think it was 7 a.m. the next day. And it wasn't too far, so we We were the first in line. We got there. We were at the house, and they'd already had 4 offers, and these people hadn't even seen the house yet.
Mm-hmm.
So by the end of the day, they had 9 offers, including ours. And the only reason we really won the deal was because I called the guy who was the listing agent and just broke it down to him. Hey, I'm actually a lender. My wife's a real estate agent. Like, we're going to have our hands on this deal. We actually kind of know what we're doing. It'll be a pleasant experience for you. And, luckily that's how we won the deal. But the only reason why they accepted our offer, it actually had nothing to do with that, was because the fact that I called them, and basically we were a young family.
Mm-hmm.
So even with all my skill and expertise going for me, it wasn't enough. You know what I mean? It was solely the fact that I was just a young man, a married young man, and they wanted to. I guess they said straight up they wanted to pay it forward, so I got lucky. Is kind of where I'm going with this. It's luck of the draw when things are so busy. So you want all the odds to be in your favor. You want to have every chance to win an offer. So it's just, if there's less hands in the pot, you're going to have a much higher chance of winning the house that you want.
I had a listing one time in Deer Park, and this man lived there by himself. I think his wife had passed away. His kids were grown up and gone. Put the house on the market, and we got a contract. And it was a single older lady that bought it. And it was, I'll just say he was proud of the place, and it was a very nice place. But they sent a pretty lengthy, repair request, an amendment, and he wasn't hearing it. And, I didn't blame him. A lot of it was unreasonable.
Right.
So long story short, we end up at about it was probably a $3,000 gap in where we were at and where they were at. And the deal just blew up.
Yeah.
So I'm like, okay, back to square one. So I get another contract. They took the time to write us a letter. I'm sure you've seen those before, but it was a young family. They had a kid and another one on the way, I want to say. And I think it was because this man had raised his family in this house and he wanted another family to have it.
Yep.
Dude, he did everything they asked.
Really?
Yeah. He was like, I want him to have it. I'll fix, cool. They want and they were way more reasonable with their list, but he was awesome. Whatever they want. Yeah, do it.
That's cool.
But you never know a seller's motive. Not every seller is going to, look at the bottom line and be money signs in their eyes. It's, I think it kind of does give you the warm fuzzies a little bit whenever someone who's moving into your house is going to appreciate it and they're going to raise kids there, etc.
Absolutely. It's a beautiful thing to be able to pay it forward and pass the torch to the family. You know what I mean? I do believe the American family is still a very critical portion of what we do. And I think that needs to be preserved. And, it's just interesting to me is just for example, when they did that good deed for me and my wife, we looked at each other when we closed, we're doing the same thing as soon as we get the chance to sell this house. Cause that's only, in the right thing to do and, in spirit of what was done for us. And it's cool just because once again, it's a house, but for somebody it's a home. You know what I mean? That's theirs. That's where their children grow up. And think about when you were a kid, when you were growing up and your first house, how you can place yourself there in your room. And
bro, I could still visualize how it smelled.
Yeah, exactly. I remember, shout out to 1211 Crawford. My parents had a bunch of land. There was trees, and I'm very fortunate to be able to just skateboard and dirt bike around, and my brother and all that kinds of stuff. And it's just cool. It's now that I'm an uncle, placing myself in my nephew's eyes, right, is a still frame memory. You know what I mean? And every going to his races, is he gonna remember me there? Right?
Dude, he's a little ripper on that bicycle, huh?
He's a shredder, dude. It's cool. It's fun to see him. I guess now be competitive with it, right? He's only 6, but he's got this grit in his eyes. I'm gonna shred.
He's got that dog in him.
Yeah, it's cool, man. And but like I said, placing yourself in kind of in your client's eyes of this memory that they're gonna have of this place, and it's just pretty cool to be a part of that. That's why I like to go to closings so much. In some cases it's not a shameless plug. Sincerely, it's because I get to live this exciting moment with these people. Like, it should be a joyous occasion. It's cool unless it was, a less than stellar deal.
Yeah. Sometimes it's not that fun to go to.
Yeah. Sometimes,
but you go.
Oh yeah, I can't make it. Yeah. No, but, it's just fun to be able to rejoice with people about, hey, we just achieved something for our family. You know what I mean? Something sincere.
And when you can tell that they're so happy that everything went how it went,
yeah.
oh man, it's a great feeling.
One of the coolest moments in my career was my wife and I got this deal where these people, I think they were almost in their 60s, and no one in their family had owned a home yet. But it's not that they weren't responsible or financially able or anything like that. They just didn't know the process and were intimidated by the whole thing from the very beginning, which I can understand. You're going to meet a stranger. You're going to literally qualify and almost try out for something, right? It's like, and that's what I love about kind of what I do sometimes is people show me this side of them that's not necessarily authentic. Like, yeah, I make, so much money a month. And then you get the documentation. You're like, that's not really the truth. But anyways, it's just cool as, going to their closing and just seeing how grateful these people were. Like, you know what I mean? Like to feel like you really had an impact on something that was just bigger than yourself. And it's just a good reminder, like, wow, I get compensated for this.
Yeah, dude. And I'll tell you what, it matters. And the reason I know it matters is because I had a transaction last year where they came pre-approved already. And it was a lender that I recognized. And I was like, oh, this will be good. Like, I recognize this lender.
Yeah.
And, I'd seen their name all around, known people that worked with them, agents that have done deals with them and everything. And dude, the communication was pretty shoddy. And then at closing, the buyers were kind of like, they were like, man, Blake, thank you so much. And this and that. But they made it a point to tell me that lender, it was something like they were talking to her about estimates or like something that was going to affect like their bottom line,
Okay.
And she started talking like, yeah, it's going to be this. And they were like, wait, what are you talking about? And she was like, oh, this isn't another person.
Oh my goodness.
So she confused them with someone else, confused the deal. So it just made them feel like, do you even know who you're talking to? Like, do you?
Right.
And it just put them off to the point to where they made it a point at closing to tell me. So
wow.
If with you being extra attentive like you are and answering your phone and like making them feel like, because you do care.
Whoa.
And if you care, they're going to feel that. And if you don't, they're going to feel a certain way too.
I mean, wow. Just a quick little side story. So when I first started my career in mortgage, it was at a bank that goes far. They go far.
Mm-hmm.
You know what I'm saying?
And they do it well.
Yeah. yeah. So, yeah. And I remember something that just always really bothered me, which was we never referred to the client's last name. It was a file number. I know it sounds so insignificant, but like I was on the front end with these people. I'm talking with them about their financials, and you and I both know it always ends up somehow in some case getting personal. Like they end up, telling you stuff you either do or don't want to know,
yes.
And I just thought it was so bizarre that every time I worked a file, it was a number. Like we had to refer to the file number. I'm like, it's the Rodriguez family or whatever. Like you can't do that. Like you can't pull it up that way. Mm-hmm. Anyways. And like kind of like you're saying, just I would be so put off if I'm making the biggest purchase of my life and you basically didn't recognize my identity as a person.
Yeah. Yeah.
Like didn't even recognize my voice. You know what I mean? Like, I don't know.
Literally the biggest investment 9 out of 10 people are ever going to make in their entire life.
Period.
Yeah. I mean, it's easy to get lazy, I guess, because we do this multiple times a month, but you have to keep in mind, man, this is people's like the biggest freaking deal
livelihood
there is in their life.
Absolutely.
A lot of times.
It's hard to sometimes, really grasp the magnitude of what we're really doing because it is so immense, and it is easy to get jaded at the fact that, I'm a salesperson, so my job is to sell, right? And close. But that's my job. But what I do is help families, and that's what's amazing. Is that's what I get compensated for. Is
you create relationships?
Is creating relationships and making like we give people shelter, man. That's that's amazing. Like just thinking about like when things get hard, it's pouring rain. Like I know it sounds cheesy, but people are warm and comfortable because of what we get to do. And shout out to home builders, right? Shout out to everybody in our industry. It's cool. It's just like, it's this big chain of hardworking people from studs to closing.
Dude, all just intertangled and interacting. Yeah, that's actually a great point, because real estate, I mean, it's just a hard industry. I mean, even now, as accessible as everything is nowadays, it's probably tougher now than it's ever been. Because like with realtors, there's just so many realtors.
Oh yeah.
And I don't know how it is on the lending side. I mean,
it's the same.
Yeah. So, and then, on the home building side, it's like the supply chain and the cost of materials, and it's always moving, and it's a problem, when you pay a certain price for materials to build a house. So you price out and spec it out at a certain price. The materials go back down, and now your home's overpriced. Like, dude, it's a lot of moving parts. It's very tricky. I used to actually be a construction manager, so I was building them for a while. Dude, it's gnarly. It's hard work. Straight up, I'll never forget. I pull up to work, first day of work, out of college, fresh, dude, green. This was 3 months after college graduation. And it's this dude, his name's Jeff, and pulls up. He's like, "You're the new guy?" I'm like, "Yeah." He goes, "All right, get in." So I get in his car, and like, they didn't have an office out there. It was work out of your car.
Oh, goodness.
And dude, I've never seen more like just papers and folders, and he's just like, "Yeah, this is it."
Yep.
And he goes, "First question. So what the hell made you take this job?" And I was like,
"Good question."
I go, "Y'all were hiring?"
Yeah, exactly.
And dude, I learned quick. They had him on about, it's like 25 or 30 townhomes at once.
Oh my
he was building. And this is like, you plan and coordinate every single step of this construction, from scraping the lot, setting the forms, putting the temporary power in, ordering the materials at a certain time, so where it all kind of gets there at the right time, because you don't want to order a bunch of sheetrock and it sit there for a month. Dude, it's like doing one would be tough enough, but he was like doing 25 to 30, and I was just like, I was like, all right, let me give this a try. So I worked there for about 6 months, and after 6 months, dude, I'll never forget. I worked my first 2 weeks. I think it was 12 out of 14 days I worked. We got off on Sundays, and dude, it was like leave at 6:30 in the morning, get home at 6:30 at night type deal, because it was in the Heights and I was living in Pasadena.
Oh, wow.
And I'll never forget my first paycheck after, dude, just slaving for, my first 2 weeks. And dude, it was like a system shock to me. Like, I had never like really had to work like that, So yeah. I'll never forget my first paycheck after taxes was $1,024.
And you were just like, dude, I would give this back
for like 12-hour days for 6 out of 7 days of the week. And that's whenever the seed in my mind was like, find something else.
Oh, absolutely.
Do something else. Thank God I did. I just, and at the time I was an idiot back then when I was 22, 23, but I got to give myself a little credit, because I remember thinking, okay, you have time. You're young enough. And for all you 18, 19, 20-year-olds out there, I didn't even know I wanted to do real estate till I was 27.
It hasn't even begun.
Don't worry about it.
Yeah.
You have time, and just keep reminding yourself of that until, by the time you're about 30, it's like got time to figure it out. But if you're
and I'm 30, so
well, you're a decade in, dude. You knew early.
Hence the bald. Yeah. It came with a price.
Yeah. So all that being said, I'm glad I had the foresight to say, look, you're young, let's try something else. And my mom had always told me, you should get your real estate license. You'd be good at it. And I just never thought it. And I got to a point where I was like, I'll try anything.
Yeah, it's a lot better than construction.
Yeah.
With all due respect.
So did that, and here we are. Yeah. I mean, Now I have a podcast.
Yeah, and a good one, man. A beautiful room. It's just interesting is like, not to make this about me, I had a kind of similar evolution. So my first job was at Vans, selling shoes. Shout out to Vans. And
Quality product.
Yeah, quality. And from there, I was like, well, man, this is not feasible. So I got in the nutrition industry. I really enjoyed that. I got into fitness and kind of reached the pinnacle of what I wanted to get out of the fitness industry at the time. And then I was like, well, what's next? And, sales, I guess. Everyone's telling me I should be in sales. I remember being in third grade and someone telling me you're going to be in sales one day. And I was like, whatever that means. But, now I'm a little bit older. I kind of have an idea, I guess. And
They thought you had the temperament for it.
yeah, I hope. And so after that, that's when I got into car sales, and it was horrible. I was selling used cars in Texas City, but I'm so glad I did because I learned so much. It was a really humbling and exciting experience. I mean, a lot of stuff would go crazy, and then I just remember thinking to myself, like, if I'm going to be suffering this much, and it's not paying, like, what's the next step? And I was just like, well, someone said real estate. You should sell a house. I was like, well, man, I'm selling a car. I could probably sell a house. And, I just took a chance, and somehow Wells Fargo hired me. And shout out to Kelly Lois, who gave me my first mortgage job. And then, kind of like you're saying, you have to have that realization, like, wow, there's a point where I don't think I could do this forever.
Yeah.
Right. Like I will literally be nothing. There will be a point where I don't have anything to give. Like,
it's just a depressing feeling when you feel like you're at the ceiling of something.
Absolutely.
It's like if you feel like you have a lot more to give, and you're like, and dude, that's just natural progression of how life is, especially nowadays. Everything is so fast paced. Used to it was, graduate high school, went to college, got a job, got a wife, got kids, you got a retirement, you got a pension, you retire at 60, they give you a gold watch.
Yeah.
You just walk off into the sunset. Now, dude, I mean, you go to restaurants. A lot of the waiters are like way older people. Like, it's just a new time, dude. People have to work later now.
The cost of living is drastically higher. I mean, everyone's gonna have the new iPhone, and I'm not making excuses. I'm just stating, like, it's incredibly difficult to be baseline of life with the Joneses now.
It is. It's
for the average person.
It's crazy. Yeah, and like I was saying earlier, we're so fortunate that we can, have a job where I make my own schedule.
Of course.
Like, man, in the history of time, like, that's probably wasn't too common as far as working people go.
Right. I mean, like, kind of like you were saying, everything's so much fast paced. I mean, it's just hard to believe, like, back in the day, people had to borderline fax their entire mortgage, to an underwriter, and that would take 3 days. And, just everything's so much more expedient now. And, like, kind of like we were talking about earlier with the landline, like, used to be just tethered to your landline. Like, imagine, like, literally having a Rolodex, and that's how you prospect. And just like, things are so different. And there's a point now where at the same time, I think things are going a little bit too fast.
Yes.
Like,
we got to reel it back a little bit.
Like, I recently bought a truck, and this was probably like 2 or something or so years ago. They called me because they wanted my old truck, and they're like, we'll give you a really good deal. I was like, shoot. Yeah, it was, I think, because they were pretty much giving cars away at the time, right? So I get to Ford, and it looks like we're at this desk, and then he double taps the desk, and the desk becomes an LED automated screen, and it's my contract. And everything was right there, and he was quickly putting it together. I mean, to the point where it almost kind of made me uncomfortable. It's not that it wasn't cool technology or anything, but being, the consumer-oriented, individuals that we are, we know, like, you can't rush, like, signing documents. Like, we, we can't be at the closing table like, hey, you kind of need to, like, gotta go. And so, but anyways, I mean, I ended up buying this truck, and it what felt like 5 minutes, and maybe 3 to maybe 4 digital signatures. It's just, I sold cars, like I told you, I don't know, 8, 9 something years ago, whatever that was. And it was a long long sheet of paper that we had to have carbon copied and like, anyway. So yeah, I think things are going a little bit too fast. I mean, for example, when now we talked about being available, I'm okay being available, but like Sunday at
Within reason.
10 p.m.,
Yeah, man.
I'm probably asleep.
And, for us, if we sit there and react to every tiny little blip on our phone, we'll never get anything done because you're just reactive all the time. Like, I know when I sit down and, like I'm going to Colorado later this week.
Sick.
So, yeah. So I need to sit down and my ass needs to record 4 or 5 videos this afternoon. So while I'm up there, I can still post.
Right.
So if my phone's going off, I'm trying to make videos, I'll never be able to finish making videos. Of
course.
You got to put the thing on do not disturb, get in your little tunnel, knock it out. And then, dude, I mean, in real estate, like I've developed a radar to what's important, like what can wait and what can't.
Right.
So 9 out of 10 things, and I know my current situation, what I've got under contract and who I'm dealing with and what they're doing. I've never called someone back and then be like, why didn't you answer the phone?
Exactly.
It's always, hey man, sorry, I was, in a meeting or oh, no problem. People are cool. Like,
right.
So yeah, if you don't time block and just put this thing down and off sometimes, you'll just never get anything done because it just never ends. Dude, I could read all my emails, have 0 emails in an hour from now, 10, 15 emails.
Absolutely. I mean, that's just emails. That's not including texts, calls. You know what I mean? It all stacks up. And one thing is for sure is just, as I grow older, I'm starting to realize that my phone is a drug.
Oh yeah.
And I'm mindfully avoiding those extra dopamine hits that I don't need from like, for example, Instagram, things like that. I guess I'm saying it's just like, for example, being blown up by texts, phone calls, all those can be such a distraction from when you're trying to work on something. And like you said, 9 out of 10 times, it can typically wait. And it's not urgent. And you and I both know, for as long as we've been doing this, what cannot wait.
Mm-hmm. Yeah. Like if we're supposed to be closing today and it's 1:00 in the afternoon and we're waiting on docs, like everybody's on edge. Okay. Yeah. That needs, I may have to wait to make the videos. Like this has got to be done right now.
Correct.
Yeah. Yeah, man, just takes time to, I'm 7 years in now, so better part of a decade. That sounds crazy saying because I feel like I just got licensed yesterday. I mean, not yesterday. It seems like a couple years, but 7 years is crazy how fast it's gone by.
But a compliment to you, man, is you don't conduct yourself like it's been 7 years. It's like it's been a lot longer than that.
Oh,
and I mean that with respect. Like you're very poised. You have your content together. It's very cool, and I'm very privileged to be a part of this today. So,
thank you, man. Yeah. Thank you.
I feel like I'm on the Joe Rogan, like 17. I'm gonna like look back in 30 years and be like, I was on that podcast.
Oh, dude. Yeah, man. Hopefully we can turn it into something. Yeah. You never know where it's gonna go. I've gotten to meet so many people for the first time. It's funny. I didn't think about when I made my podcast studio, I didn't think about the fact that it's in my house and I would have strangers
in your house.
So I've had a lot of people that I've met for the first time. They knock on my door just like you did. And it's like, hey, how you doing? I'm Blake. Come in my house.
Yeah.
And, but dude, it's been cool. Just meeting all different types of cats, man. Like just people in different businesses, construction. My buddy, Jared, that I met basically through Instagram, and he wanted to be on the podcast. Now he has a clothing company and a junk removal company. I had Track Sounds. I don't know if you saw that. He's a producer, rap producer. He does real estate stuff on the side too.
Nice.
He worked for he did Young Dolph, Wiz Khalifa.
Okay.
Like he's worked with some big names and stuff. So I never would have met those people ever.
No.
And that's what's so cool about a podcast is it's such a sabbatical to just networking. I never would have gone out and randomly met these people. It just attracts people. And like I said earlier, you don't need money, you need people.
Of course. And what's interesting is, how often do people really make time to have conversations now?
Never.
You know what I mean?
Ever.
Like as in, I'm going to go, I'm not a perfect example, but for example, I'm going to go make time to go have a conversation with my grandmother. or you know what I mean? I'm going to go make time to have conversation with my family, or, you know, I don't know. That's something as I grow older, I'm starting to really appreciate. Cause like, you know, for example, there will be a time where that, you know, your dad calls you and starts ranting on the phone, whatever, like that might be the last call, or, you know, so it's just like, you know, I'm starting to realize, like, you know, making time for conversation is something I want to do more in my life, whether it be podcast or, you know, anything, just making time to speak.
One time Theo Vaughn was on Joe Rogan and he was like, they were like almost done with the podcast. He's like, man, I'm pretty sure this is the longest I've ever talked to anybody ever exactly, in my life. And
right.
just like just sitting here chopping it up. Yeah. Cause people are just so distracted, man. And you got to go here, you got to go there. So fast paced now that, yeah, we're kind of losing a little bit of that.
Like, you know, it's just interesting. Like, for example, going to an old folks home, like how many people you see engaged in conversation. I mean, locked in eye contact, right? Like not distracted, not even playing board games or anything. They're just literally lost in conversation. Like, I know it sounds cheesy. It's just like, there's an art to that. And, you know, for example, with this being my first podcast, I'm realizing the skills of which I need to get better at for these things.
Oh, you're doing great, dude.
Oh, thank you. But it's just interesting is like, you know, there's an art to podcasting, right? There's an art to conversation. There's like an art to sales. There's just like, I guess what I'm getting at is just like, conversation is something that I think we need to really bring back, and podcasting has done that more than anything.
And one thing I noticed with people in conversation in the year 2023, I think people are more how should I say this? People are more consumed with their own selves more so now than they've ever been. So whereas I consciously try to have conversations where you're talking and I'm listening to what you're saying. Then I'm going to take my time and reply to what you're saying. There's so many times I feel like I'm in conversation with someone and I could tell that they're like ready to just say what they're not even listening to me. And they're just ready to like one up or tell you what they want you to know, like what happened to them. And it's very rare to have a conversation where it's like a game of tennis.
Right.
Yeah. So
I get guilty of that too, man. It's not the one up thing versus I'm legitimately really excited to talk to people.
Yeah.
Like, you know, sometimes like, I've had to like, realize I need to relax almost, like, cause you know, the energy that I put off to some people is probably too much. And it's not that I'm, you know, trying to be dominant or anything. I just love people.
Yeah.
Sometimes I need to realize like, they may not like enjoy this conversation as much as I do. You know,
like you were saying, the podcast is an art, and I've had to learn how to do it. Like if you listen to my first podcast, what I try to do now is I really try to make it a point to let people say what they're saying, and I'm not going to jump in and be like, oh, but this, and I need to just sit here, shut up, let them talk, and then reply, because it's not listenable. Like, I don't know if you've ever seen those Fight Companion episodes on Joe Rogan where there's 4 guys screaming over one another, and Joe's like, guys, you cannot talk over each other. People cannot hear.
Right.
It's just jumbo. So I've definitely had to learn how to podcast. That sounds stupid, but
no, it doesn't, man. You know, like it makes me think of this quote or this meme I saw when I was a little kid, something along the lines of, do you know why every movie finishes? Is because everyone gets the chance to say their lines. I know it sounds so dumb. It's just like, oh, okay. So like being reactionary, which is most people, including myself, like being a loan officer, I have to be ready and proactive, right? Mm-hmm. You know, active listening is something that I really need to, you know, continue to work on like a muscle, like literally the ability to just sit and stare at someone and just attentively listen and not speak. And, you know, I was thinking on the way up here, like, for example, the medium of which we're doing is podcasting. Like you're saying, if I'm talking over him, it's going to sound terrible. No one's going to want to listen. So I'm like, you know, in a weird way, I should almost start to conduct every conversation in my life like a podcast. Just like,
dang,
you know what I mean? If I can pretend like in every way I'm communicating with someone that, you know, it's being listened to in a way.
Because you care more.
Yeah, I'll care.
You're not just going to talk out of your ass.
And better yet, I won't, like you're saying, I won't cut people short. I won't try to one up or, you know, and I'm like, man, so that's like, for example, Joe Rogan. That's one of the reasons why he's such a great podcaster, is because he legitimately listens asks questions, doesn't necessarily judge people. He just wants to understand, and that's something is, don't listen to hear, or it's like, don't listen to respond versus like listen to understand.
And I think one of the ways you can definitely tell he's so good at that and that he is actually listening is he doesn't just agree with whatever everyone says. He will play devil's advocate and bring counterpoints to what you're saying, and not in like an a-hole way, but just to kind of give you a different perspective. And that's engaging. It's way more engaging and listenable if you have someone being authentic like that.
Of course. I mean, this is kind of a unique example, but remember he had that one guy that was basically pro-medical marijuana, and the other guy was like he wrote a book that was anti-medical marijuana. And it was just amazing is because this is two very contrasting opinions, and they're just having a discussion. And my point being, that's where we need to be in today's society. Like, for example, you can be left, you can be right. That's okay. You can be whatever you want, but we have to be able to have conversations about these things without being irate and just nasty towards each other.
Well, a lot of people won't even, if you don't agree with what they say, or like their whole bag, their deal, right, left, whatever it is, they just won't even have a conversation. They just walk away.
And just like, for example, remember when you and I were kids, like people would ask you, are you Democrat or Republican? And you would answer, and that was it. And it was, there was, it was cool. Like you're probably indoctrinated from your parents too. Like,
100%.
And I just remember that not being such a thing, and it wasn't your identity. It wasn't who you are versus it's just kind of something that you agreed with or disagreed with,
It's so extreme now. Like, dude, the right, like the right Trump people, like the second, like the Gun Rights Act, dude, and I'm all for that. I'm all for, right to bear arms, freedom, free speech. I don't want the government in my business. But God, man, people go full. It's like that's their identity.
Of course.
Dude, just drive around and look at like just stickers on people's vehicles.
Right.
I just don't ever remember a time where it was literally, I've never seen it to where how it is now, where it's like that's their identity. That's like how they market themselves to the world and like what they're about and everything, rather than like, yeah, this is my outlook on things and here's my life.
Right.
Here's my house, my kids, my job, my hobbies. Now it's all one thing.
Of course. Yeah. It's like the best example I can give you is stand-up comedy. Like people can no longer separate the act from the actor. You know what I mean? Like, for example, like if someone goes up and says some ridiculous stuff and it's for a laugh, it's for a laugh.
That's the point. It's comedy.
Right? It's not necessarily some guy being malicious on stage. Like, it's not like there's like public hate groups where people go up, you know what I mean? And I don't know. It's just my point with that was, we have to be able to realize like you can not like someone's opinion and still like that person.
Yeah.
It's okay. Like there is a fine line between, act and acting, or the actor and the you get what I'm trying to say. It's just like they cannot be one and the same. Your identity cannot be so consuming to yourself that you can't even be a decent person to other people.
Yeah.
I tried to say that way more eloquent.
All right, dude. Well, you want to go over some of this, like some of the products you offer and stuff?
Yes. So we have a vast amount of products. My company's at the corporate office, so we work with a multitude of investors. But specifically, the FHA, USDA, VA, conventional, jumbo loans, down payment assistance programs, all the basic programs, we have those things. But in addition to that, we have what's called non-QM loans, which are non-qualified mortgages. So, for example, imagine you're self-employed and you write a bunch of stuff off with Uncle Sam. At that point, you're basically telling the government you don't make what you actually make, or it costs X amount of dollars to do business. So that does count against you when it comes to qualifying for a mortgage. So for example, let's just say you really did make $200,000, but you wrote off $100,000. That means you really can only qualify with $100,000. Mm-hmm. And that's critical when it comes to purchasing. So we can qualify people without their bank statements and without their tax returns and only use bank statements and get 12 to 24 months. And that's just an easy way to qualify people without having to use those things. And as far as, the company itself, communication, milestones, we have underwriting, processing, everything's in-house. We're local. Rates are fantastic. I'm pretty okay myself.
Pretty okay.
Yeah.
Here's a question for you that this is one of the big questions I get especially from first timers. Do y'all have any first time home buyer programs or any down payment assistance? Okay. So the question, down payment assistance, is that wrapped around in the back end of the mortgage somehow?
So there are some parameters to those loans to where it can be a true grant. And there's different types of, so for example, some of them have what's called a second lien that's forgivable and some don't. Typically, I recommend the forgivable liens, okay, which means they then have, so basically if you sell within 5 years of owning the property, because of the first 5 years, you're essentially paying back that grant, you then have to use proceeds of the sale to pay back that grant. Mm. If you're there for longer than 5 years, it's pretty much free money. And at that point, they no longer have a lien on your house. So at that point, the grant's been paid back, but it is included in your mortgage. But where I'm going with this is if you plan on living there for quite some time, it can be a very lucrative product for you.
Yeah.
But if not, I wouldn't suggest them.
Okay. Because I had some kids one time wanting to buy, and they were using VA, and I think they were with Navy Federal Credit Union.
Navy Federal Credit Union is actually fantastic.
So, but
in terms of rates, I don't know about service.
Yeah, I mean, I think their rate was kind of like whatever it was at that time, mid fives or something. But they were 0% down because it's VA, and then all their closing costs were getting paid. But like I looked at it on paper, and it was like 103% financing.
Yep.
So I told them, I'm like, look, yeah, this is great. You're going to be able to walk in this house without paying a dime, but you're going to walk into this house upside down. And had they bought back in 2017, they would have been more than fine. They would have made out great. But that's not always a comfortable feeling to know that you're walking into a house upside down. So I really always try to educate my people and just say, I know this sounds great, but at least ask them and look into this and say, because you've heard that saying, there's no such thing as free lunch.
Of course.
So yeah, just
so quick caveat to what you're saying. So a lot of the times, people when they have a VA loan, okay, they hear 0% down and they think that means no money to closing.
Right.
You still have what's called a VA funding fee, and depending on whether you've used your VA benefits or not, that's a percentile charge that goes directly into your loan amount. So that would be the above 100% financing that you probably saw. So typically, if they have used it, I believe it's 3% or 2.5. It depends on whether they've used it or not. And there's a specific chart to show what the funding fee would be based on their usage.
Mm. Okay, that makes sense. Yeah, because like I hardly ever get VA deals for some reason. I mean, they're just not that common. Yeah, and it's a shame that people look at them the way they do.
I was just about to say that.
And I have this kid I'm actually showing right now, and we looked at a house out in Shore Acres the other day, and those older homes, if you're FHA or VA, you really gotta be careful on what you choose to spend your time on and what you choose to entertain. Because I'm looking around these houses and I see like there was like a crack in the brick and some rotten wood around the outside, which on a conventional loan, rotten soffit board on the outside, dude, I mean, that's easy. Like, that's an easy fix, but the VA is not going to come out there and approve that. They're going to say, correct, we need this fixed before closing. It just kind of sucks that it has the stigma that it has with agents.
Correct.
So
it's unfortunate because these people literally earned this benefit. I mean, and there's only one way to get it. Yeah. So it's just it's sad that from a seller perspective, it's not viewed as as a perk. I see it as a benefit. I mean, you definitely, of course, at the end of the day, whom you sell to doesn't necessarily directly benefit you, but I think it's a great deal for not only them and the fact that they earn it, but the fact is it's not a lesser deal for that individual. Whoever's selling that house should not look at a VA loan like it's a lesser product. The only thing is, of course, the inspection requirements are a little bit more stringent, but that's pretty much it.
Yeah, and I mean, when you say more stringent, so in my experiences, they don't want any rotten wood on the outside of the house.
That's correct.
No obvious foundation stuff.
Yep.
That it has to have a heating and cooling system that works. Has to have a cooking apparatus of some kind where you can cook food. It has to have like a range or a stovetop and
flooring.
It has to have. It can't be just like bare concrete.
If it's bare concrete, it can be stained concrete,
but it can't be bare.
But it can't just be bare concrete.
Yeah, and then a visual inspection of the roof. I'm pretty sure.
Yes.
Yeah, I mean, hey, and the reason is because this stuff's backed by the government.
Yep.
And the government's going to want to know that they're buying a product that's, going to be around for a while and be sellable later.
Of course.
Which makes sense. So, yeah.
Yeah, it's in your best interest to get an inspection regardless. Most of the things that they do pull up typically are worthy of being discussed, right? It's not like they're just looking for issues, because at the end of the day, they want to sell a house too, But of course, there are specific requirements, and yes, they can be a little bit more difficult, but at the end of the day, it does not directly affect a seller in terms of net value, which at the end of the day, as a seller, you should care, in my opinion, about two things: your net value and how quickly you can get that net value.
Mm-hmm. Yeah. Yeah. And, if you have a newer home, like this whole neighborhood right here, VA, FHA, conventional, it don't matter. Like it wouldn't, that one we sold over there on one street over, I was telling you about, was VA. No problem. Go. So it's just, you run into problems when you're looking at stuff like old Pasadena, old LaPorte, stuff built in the 60s and 70s. It does get a little bit tougher, and I wish they could find a way to be a little more lax on like what they would allow, but I don't know. The powers that be aren't having it, I guess.
The powers that be.
Yeah.
I just, I would like to see people's perception of VA loans change, just because, once again, that's somebody that's deserving of shelter. I think more so in some cases than anybody. So.
Oh, absolutely. I mean, it's the reason why we were able to be here and have shelter.
Amen. Not to be a huge patriot, but I mean, just once again, they deserve it. And, it's just interesting, is like I said, kind of like how people view an FHA loan as not like a downgraded loan, but a lesser than loan. It's not. It's just specifically for veterans. And once again, people don't like that the value sticks for 6 months.
Well, people just hate the PMI. And I find that people do not like that. And the thing with FHA, and correct me if I'm wrong, but you can't get rid of PMI on FHA. Is that right?
With FHA, if you put 10% down, you can have it for at least 11 years. Okay. But it's typically for the life of the loan. Okay. So, yeah, I mean, and there's very few and far between reasons to have an FHA loan at 10% down anyways. Of course, the VA, once again, another benefit with the VA is the fact that you don't have that mortgage insurance. It's a good, just shout out to the VA. I mean, more VA, please. But FHA is, yes, for the life of the loan, unless you put 10% down, then you have to pay it for at least 11 years.
Okay. Or refi into something else.
Or do the commonsensical thing, which is refinance and then not pay that on that loan for 11 years.
Right. Cool, man. Well, is there anything else you want to kind of talk about, or?
Let's see. So real quick, statewide, third quarter, some stats.
So this is interest rates or what?
So this is the Texas Quarterly Housing Report from TexasRealEstate.com.
Okay.
So this is they release 4 Qs. This is the third quarter because the fourth one's not available yet. So this is statewide third quarter of 2022. So it's a little outdated, but some interesting information regardless. So days on market is 31, typically 39 or so days to close. So about 70 or so days, which is 4 more days than 2021 Q3. So my point is, in terms of things flipping, it's about the same time.
Yeah,
which is kind of interesting. So my point being, rates may not have may not have had the effect of which people presumed in terms of the market.
Right.
Because they're still not so bad. So it says 14 or so percent down in sales, and then typically 2 months in inventory versus last year, which was 1 month.
Yeah. Well, the thing is we still have it's still low inventory. Like, even though there's more inventory than there was, there's low inventory, and you have a lot of people who need housing. So that's why prices are kind of staying up. Yeah. So that's interesting.
Just thought I'd throw that out there.
And you would never hear that. Watching the news, and like, if you just search real estate on YouTube,
doom and gloom.
Oh my God. The thumbnails are hilarious. Like, houses on fire.
Yeah. I just thought this was interesting, man, because at the end of the day, like, there's a lot of charts, a lot of graphs, a lot of news, but at the end of the day, when something is listed and when it's sold, I think that's what trumps all. And I just thought that was interesting. Is it's really only 4 more days than in 2021 Q3, so we're not that far behind.
Yeah, man. I think it's gonna. I've been saying I'm hoping this market kind of turns into kind of how 2018 and 19 was, where if you wanted to buy a house, you could go buy a house, and if you wanted to sell a house, there was a ready buyer that was, you price it right within a week. Hopefully, you have a contract, week or two.
Course,
rather than an hour or two.
yeah. But dude, thank you so much for having me on this podcast, man. This is very cool. Your setup is amazing, and
thank you. Yeah, we were supposed to have your business partner, but he had to go to a closing.
He had to go to a closing, so he's following his ABCs, and he's always be closing.
Yeah,
or always be closing.
Always being closing.
Yeah.
But we'll have to do it again, man.
Yeah, we'll bring him back on, and hopefully we do this again. But sincerely, man, you're doing something really cool here, and thank you for having me on, bro.
Thank you, man. Thank you.
For sure.
Later, y'all.